and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on consumer defensives and our guest is Erin Lash, Director of Consumer Equity Research for Morningstar. Well, we all lived through it. Huge lines in supermarkets as the pandemic got underway. We loaded up on toilet paper, pasta, cleaning products and alcohol, and then spent months indoors with little to do other than cook, clean, and perhaps enjoy a glass of wine or two. So you might be surprised to find out this sector, as measured by the S&P Consumer Staples Index, significantly underperformed the wider market, not just last year, but over the past several. So far this year, it's up about 5%, but again on track to underperform the S&P 500. The companies that make these products are lumped together under various names: consumer staples, consumer non-cyclicals, or consumer defensives. They make things that people simply can't or don't want to live without, no matter how badly the economy is doing. Food, drinks, cigarettes, alcohol, and cosmetics all belong to this sector. So what's its outlook and how can you find the companies best positioned for success? Let's ask Morningstar's Erin Lash. Hello Erin, thanks for joining us. So I know this is a very large sector and it might be hard to generalise, but why didn't it benefit as much as we might have thought from all the panic buying last year? And what's the outlook now?
Yeah, from a financial perspective, as you highlight, it did benefit. Sales were quite robust and firms were boasting improving profits. However, despite that, expectations were quite high, given consumers were staying closer to home and were utilizing the at-home or retail channel as opposed to away from home. And so these firms were challenged, and going forward, they're going to be further challenged. They're lapping those tough comparisons over the last several quarters. And in addition, they'll be facing inflationary pressures as well as stepped up competitive intensity. If you think about it, given the supply-demand imbalances that we saw at retail shelves over the past year, promotions lay particularly dormant, and that is unlikely to persist. And so we expect heightened competitive pressures going forward.
Let's focus in on those inflationary pressures. How will the recent spike in producer prices and other shortages, including increasingly in the US, a labour shortage, affect their profitability?
Yes, a number of firms have highlighted the fact that inflationary headwinds are picking up steam. And as a result, a handful of firms have already announced their intentions to raise prices at the shelf. We anticipate that those firms that are focused on consumer valued innovation are best positioned, I should say, to weather that without realizing a significant contraction in volumes over a sustained period. And so we anticipate that firms will need to continue spending, both as it pertains to research and development, as well as marketing, to make sure that their products continue to stand out at the shelf.
So which companies are your favourites in this space? Who's weathering it the best?
One of our top favorites at this point in time is Kellogg. We think Kellogg is trading at about a 20% discount to our fair value estimate and also offers a 3 to 4% dividend yield. From our vantage point, Kellogg had already been positioning itself to improve its financial performance prior to the pandemic by moving away from direct store distribution in favor of warehouse delivery, moving and getting rid of unprofitable SKUs and brands, while also upping its investments behind its brands. We think the market underappreciates its exposure to faster growing emerging markets, which represents about 20% of their sales, as well as its exposure to the on-trend snacking aisle, which is about half of its business. And so that's one of our top picks.
Thanks so much for that. That was Erin Lash, Director of Consumer Equity Research for Morningstar. Well, before we go, here are some of the top stories in the sector. The German economy shrank more than expected in the first quarter as the country's consumers piled more cash than ever into savings, resulting in a plunge in spending. Europe's largest economy shrank 1.8% quarter on quarter. That's despite the fact that households' disposable income increased as the government put billions of euros into job protection programmes as well as cash handouts. Household spending fell 5.4%, while the savings rate rose to 23.2%. And in Britain, shoppers are heading out to the supermarket more often as the country's vaccination programme gathers pace. Industry researcher Kantar said shoppers made 58 million more visits to the supermarket in the 12 weeks to the 16th of May than they did in the same period last year. Kantar also said there are signs the big weekly shop may be on its way out, with the average size of the basket falling to its lowest since March last year. An Italian drinks group, Campari, is looking to Asia and the United States for potential acquisitions. Campari CEO Bob Kunze-Concewitz told Italy's La Stampa the company is targeting premium brands. The group already owns Aperol and Grand Marnier, but currently Asia accounts for only 1.5% of the company's sales. And that's your roundup of the consumer staples sector. I'm Elena Casas, and this is Reuters.